Good morning, traders. Welcome to the start of a new trading day. It's the 17th of March. We are Signal Centre talking bull. I'm Joe, joined by Steve. How you doing this morning, Steve?
Yeah, good mate. Not too bad at all. Bit of a rock and roll day yesterday.
Yeah, indeed. We've made it to the end of another week, though. So, yeah, St. Patrick's Day as well, Steve. Happy St. Patrick's Day
Yes,
to you.
thank you very much. Yeah, lovely.
Will you be celebrating with a pint of the black stuff later?
I will. I'll have a pint of the black stuff, maybe more than one later.
Okay.
And also tomorrow. Obviously, we've got a big rugby match tomorrow.
England, Ireland tomorrow.
England, Ireland. Yeah. So that'll be a tough one.
Yeah.
But yeah, I'll see how much black stuff I can drink.
Okay. Good luck with that. Okay, let's get on with it then. So obviously lots happening, as Steve mentioned, plenty of volatility in the markets for us to discuss. So let's get into what were the driving forces behind this volatility yesterday. So the banking sector continues to trigger further volatility. Just ahead of the ECB policy decision on Thursday, there were reports that the ECB had warned EU finance ministers that there could be vulnerabilities in the Eurozone banking sector. At the same time, there were reports that the US First National Bank was facing a hole of up to $25 billion, although deposit withdrawals had slowed. Risk appetite dipped sharply in response with sharp market moves, and there was a fresh recovery in confidence later in the New York session after after reports that JP Morgan and other US banks were looking to support First National Bank. Later reports suggested that the major banks will provide up to 30 billion in deposits for First Republic, and the Fed also announced it would provide liquidity through the discount window. In this context, there was a pretty strong rebound in risk appetite. So it feels like 2008 all over again, Steve. The bailouts are coming
Yeah, thick
thick
and
and fast. The ECB inflation concerns trump the banking fears. However, the ECB announced that it would proceed with a 50 basis point rate hike, taking overall rates to 3.5%. According to the bank president, Christine Lagarde, there were 3 to 4 members who opposed the move and wanted to take a wait and see approach at this time. There was a notable shift in forward guidance, with the bank dropping specific guidance on further rate hikes and insisting that decisions would be data dependent and determined by the dynamics of underlying inflation. The bank was still concerned over inflation, with inflation projected to be too high for too long. According to Lagarde, there will be a lot of further ground to cover if the baseline scenario is met, but this is a big caveat. The US jobless claims declined as well. We saw a decline to 192,000 in the latest week from 212,000 in the previous week, and below the consensus forecast of 205,000. So that dented confidence slightly as well. We also saw weak Philly Fed index numbers, with the manufacturing index recovering only marginally to minus 23.2 from minus 24.3 previously, and well below the consensus forecast of minus 15.5. Fed expectations have stabilized a touch despite choppy trading. Fed fund futures contracts overall attempted to stabilize, with markets more confident that the Fed would opt for a 25 basis point rate hike to 5% at next week's policy meeting. The dollar lost some ground as well on the back of the First Republic support and recovery in risk appetite that curbed defensive support for the US dollar, although sentiment was volatile, and the ECB also provided limited net support, with decisions seen as a vote of confidence in the financial sector. So lots happening, lots of volatility. Let's get into some charts, Steve, and have a look at how things are shaping up for the day ahead.
Okay, mate. 25 billion doesn't sound like a lot, really. I don't know why
Just found
everyone's
that down the
getting.
back of the sofa.
Yeah, or just press a little button, it prints at load. Easy.
Yeah.
Let me do the job. Bitcoin, we are having a nice little rally in Bitcoin, actually. Broken through the major resistance that we've had, 25,400. So it's making good inroads into a push higher. Obviously, we face heavier resistance up at 29,000, but I don't think there'll be a lot between there. If this momentum can gather a little bit more pace, then potentially decent upside for Bitcoin over the next few days. So as you can see, we've broken through. Just need to maintain this positivity for more than 24 hours. Previously, we've broken up. We've actually hit a high at 26,533, and we're heading there now. And if we can maintain some a couple of closes, maybe a daily close above this level, then further upside should follow quite quickly. As you can see way back, there's not really a lot in the way of resistance between here and the 29,000 level. 29,000 for me is the real big test for Bitcoin. On to Ethereum. Ethereum hasn't quite managed to break that similar type of level that it has in here.
Those dogs didn't like Ethereum much, did they?
They didn't like Ethereum. No, they've got a load in their wallets, and but trying to sort of like get out just above this 1730 level, but not managing to do so far. And yeah, so 1790 is the sort of next level up. We've drawn a sort of like well, it's the wrong color. It should be a resistance line here, a little bit line in red. Yeah, 1730 has always been a pivotal level in Ethereum, so watching that closely. A break above there, a little bit of momentum to the upside, and 1790 should open up. And then I suppose what's the next real major point of resistance would be all the way up at 2030. So looking like it's got a nice potential up move here with although it's sort of like we are saying on the Elliott wave side of things, it's looking like we've had the fifth and final wave, or we're looking for this end to the fifth and final wave at the moment. So could be short-lived, you never know. XRP picked up a little bit yesterday. It's been down to the 35.46 level. This is cents, and trading now at 37. The major resistance here is at 43.27, but that's a little bit of a way off. We've got this downward trending resistance, which is managing to keep a cap on things at the moment. So XRP, really sort of like struggling to make sort of like inroads. We've got a Ichimoku cloud resistance around where we are now as well. So let's move on to commodities, something a little bit more physical than these cryptocurrencies. And gold continues to look quite promising to the upside, again in the fifth leg after a fourth wave correction on according to Elliott wave. The next level of resistance is 1960, and above there we're looking at the all-time highs around about 2075. So good potential in gold, still continuing to sort of push higher. Obviously that's a lot of this will be based on either safe haven or what the dollar's doing, so that's important. Joe will show us what's happening, give us a good rundown on that. There's lots of volatility, and that's why we're getting this reaction in gold. Silver, similar sort of price action to gold, although it's not really making the inroads that gold is. 22.76 is the resistance above. That was a previous double top neckline, and we stalled at well, Wednesday we stalled at 22.38, and really sort of like trying to retest that level at the moment. So quite positive on the precious metals. I haven't looked at copper for a while. That looks like, again, like a fourth wave correction, ready for the fifth leg higher. There's a lot of lines on there, Joe. Let's tidy it up a bit. We're currently below the Ichimoku cloud, so broken down into a downtrend, but had a little bit of a rally yesterday and a bit of follow through to the upside today. Crude oil collapse committee, although we did get down to yesterday, we got down to the 65.92, which is a previous day's low as well, and rallied from there. So a little bit of hope in WTI crude oil that we might have formed a little bit of a bottom. You can see we're in a fifth and final wave here, trying to eke that out. Resistance will be at the previous swing low, which was support, now turned into resistance at 70.21. That's only a dollar away. Brent crude oil, same sort of price action, looking for that fifth and final wave level to get some sort of correction to the upside. And yeah, resistance coming in at 75.26, we're bang on it. So that's like, seems to be performing a bit better on a percentage terms compared to the last swing low. Yeah, so looks quite positive on the oil. Natural gas still holding around the 250 level. Seems to be sort of like a bit of sideways price action. Obviously 210 the support, 305 the resistance, and we're sitting nicely right in the middle of that. So really looking for a little bit more direction. If anything, could this be a bottoming formation? We've still got the old measured move target that we talked about before of this head and shoulders, which is down at 135, but it seems to have stemmed the flow lower at the moment. Let's take a look at FX through Joe.
Do that. Thanks, Steve. Okay, chart. That's the intraday. Let's look at the daily. So very choppy yesterday. We can see that prices attempted to, although they gap lower following a strong move on Wednesday. Yesterday we saw lower prices continuing to stall at the reverse side of this broken wedge, actually. So that's quite interesting in itself. Still finding support here at 103.62. So while that remains the case, then there is potential for dollar interest to spike again around these levels, as we can see on 3 occasions here, and a little bit of a move below this level, but each time the buyers stepped in to push things higher. So will they do it again on the 4th occasion? We'll have to wait and see. Big move to the downside today already, down by almost 0.5%. So very much a risk-off filled to markets at the moment. Just have a quick look at equities and see what they're doing. Yeah, we can see generally all pretty green across the board. Steve will come on to those in a moment. So let's take a look at Euro US dollar. As expected, you've got the reverse side of what we've just seen on the dollar index. Potential for this to be forming a head and shoulders top, needs to do a fair bit more. Obviously needs to break down through this neckline here, which is around 105.31. In terms of where I'd be expecting rallies to halt, somewhere maybe around there, 106.78 on an intraday basis. So that may be a level worth watching to see what happens. But ultimately, it's pretty choppy, and this is not a top pattern until it completes it. So for the time being, this is just pure speculation, and we have to wait and see what happens next. Taking a look at cable, we can see that that is on the front foot. We've seen the breakout of the wedge. We completed a gap fill on this as well on Wednesday, and since then prices have been pretty robust and quite strong, holding around that 120.30 level and pushing to the upside. So that could indicate further moves higher towards 122.98. So that's looking pretty strong, pretty decent move from sterling across the board today. We have seen some strength in the Aussie and New Zealand dollar currencies. Again, maybe an indication that we are seeing a bit of a risk-on move now. And I think we had some overnight data from Australia as well, so that is probably being priced in. Let's just take a quick look at the intradays to see if there are any. Yes, there was a big move around 1 a.m. this morning on Aussie, which has triggered further moves higher. So that's looking pretty strong this morning. Let's take a look at some of the other majors. Look at dollar yen. So that was a bit of a choppy session yesterday. We saw lows all the way down to around 130.74 before posting a decent rebound and posting a bullish hammer candle on the session. By the looks of things, we're looking to buy that a little bit lower, but didn't quite get filled. So overall, still pretty choppy. Got resistance up here in the short term around 135.93. So maybe an opportunity to sell into that level if you are still expecting there to be further dollar weakness. But these two are kind of offsetting each other. There was a pretty massive move in yen yesterday, actually, as a result of all that was going on. So not sure how I feel about that at the moment. Dollar CAD, we can see that's holding this support zone between 136.82 to 137.00, pretty much at that level at the moment. We can see there's some previous highs from this period here, which seem to be doing a job as support. Let's see if there are any willing dollar buyers today to try and pick that up. Dollar Swiss, we can see there was a big move higher on Wednesday. Prices stalled a bit yesterday and moving lower again today. So the dollar really is very, very choppy at the moment. Very undecided. Obviously, lots going on with regards to these bankruptcies and bailouts and inflation and interest rates changing. So it's very challenging out there at the moment. Lots of volatility, but that can, of course, mean that it can create some opportunities as well. Okay, let's take a look at sterling yen, because that's one of the requests we've had today. I don't know if we've had any others. Steve, can you see any on the stream?
Yeah, Aussie dollar. Did we have Aussie dollar as well? I think. Yeah, Aussie dollar and Euro yen.
Okay.
Sterling yen.
Sterling yen. So Aussie dollar, just been through this, seems to be breaking out of a wedge, seems to be pretty strong, pushing higher today. Numbers overnight from Australia, which have put that on the front foot, combined with that with the dollar weakness. Potentially some resistance in here around 67.16. If we can overcome that on a closing basis on the daily chart, then that could trigger further gains to the upside. So it's looking pretty strong this morning. If we take a look at sterling yen, still trapped by this downtrend, as we can see here. Let's just tighten that up a little bit to encapsulate that precise high from December. And we can see there's been no closes above this level, despite multiple attempts at trying to break through that. Then we saw this big negative candle on Wednesday, potentially into some resistance here around 161.86. But a very big turnaround yesterday, actually, from the intraday lows. So do I want to sell that? Maybe into this level again. I think if we get close to that downtrend line around 163 on the nose, actually, or up to 163.08, then that could potentially be a decent opportunity to think about a short trade. Bearing in mind that every time we've seen rallies to this level previously, it has resulted in a sell-off and been unable to close above it. Of course, if it does close above it, it totally invalidates the bearish view, and we can start thinking about maybe higher prices if we get a sustained breakout from that point. But do I want to sell it right now? Probably not. Would I be interested in selling it up at those levels at around 163 to 163.08? Possibly, yes. Okay, I think that's it. Oh, Euro Sterling just come through. Let's take a look at that then, shall we? Again, mixed bag here, and it has been for a while. It was trading in a bit of a triangle pattern. We seem to have found some support around 87, 83, but we got a close below that on Wednesday. And yesterday we rallied to retest that level, actually overshot it quite substantially before then closing back well below that and actually closing at a new low on a closing basis. A bit of strength today. Potential for this level to continue acting as resistance. 87, 83 is the key level. If we close back above that level, then it may invalidate that bearish threat in the short term. But while below that level, we could see further downside. We did find some support on Wednesday at 87.21. This is a previous swing low from back in January, which did a pretty good job. So maybe we'll get a retest of that level at some point. In terms of the risk reward, if you're selling into that level with a stop maybe above yesterday's highs, targeting a move back down to this support level, the risk reward isn't quite 2 to 1, but potentially an opportunity there nonetheless. If it does break through that level, then I'd be looking to target a further move down towards that region there, at which point the risk reward becomes a lot more favorable. So that's it from me. Steve, do you want to take a look at some indices? What's happening there? I didn't change the banner. Sorry, guys.
Oh dear, still talking about commodities.
Yeah.
Yeah, well, what's going on in these? It's a bit of a mixed bag at the moment. I suppose yesterday's reaction higher, like Joe mentioned, the risk on we saw from it's stopped the sell-off in its tracks, and we've reversed pretty sharply. We are approaching some sort of decent resistance levels. This is FTSE, which bounced from around about the 73.22 level. I think we were highlighting as support at 7,300, all the way back up through 7,400, which was a level of support which was broken. And yeah, making its way up now, trading at 7,500, and still a little bit of momentum to the upside, especially on the short-term basis. Overall, this is the completion of like an ABC correction lower, and bounced off, bounced in front of a really good, decent level at 7,300, as we can see from this chart there, long-term levels going back into last year. So, but on the short-term chart, there's maybe a little bit of a sign of potential for further upside at the moment. I don't know whether this will last into the US session. We've got a nice little double bottom formation forming here. Bounced nicely, retested, came through the neckline, retested, and bouncing higher as we speak, 7,500 trading. Has this got enough momentum to take it through a level of resistance, which will be here? Potentially, yes. And the next real level of resistance all the way up at 76.44. As you can see on an hourly chart, this is quite a nice little recovery. Take a look at DAX. Similar sort of price action on DAX. We've got this neckline for this double bottom formation and projecting higher from that now. However, I think we could run into a little bit of trouble if we do manage to get up to that 15,267 level. US 30, similar sort of price action. We've got this, let's take the line from there. We're right bang on resistance. And you can see, again, you could say it's a double bottom formation. Here's the two bottoms. Here's the neckline. And we're breaking through that now. and it's just whether there's enough momentum in this European session this morning to take it higher. Nasdaq has projected a lot higher than what would have been the neckline. We could say the neckline was here. It's rallying higher, and but that should sort of run into maybe some resistance, or maybe it's through there. It is through there. There's a nice downward trending resistance line that would have created a third point there, and it's broken aggressively higher. So it looks very positive on the Nasdaq side of things. On the same sort of thing, inverse head and shoulders, triple bottom formation, and we've broken higher from here. 39.40 would be the next, if we are to reverse at all, would be quite a decent support level in the S&Ps. So yeah, I was trying to look for reasons to maybe sell into this rally, thinking Friday, end of the week. We've had a little bit of a this risk on rally, but obviously we've got a weekend coming up. Are people going to hold their positions into that weekend? Not so sure. There seems to be sort of every day that goes by, there's another sort of news story of a bank failing or something worse. So yeah, I think we're getting a nice corrective rally here, but I think it could be short-lived. Feels like that these markets are sort of in the middle of where I'd really want to get involved. Obviously, looking at a lot of them, you'd like to sort of like buy the dip to the neckline or sell the next rally higher into resistance. It feels like we're in the middle at the moment with these indices.
Yeah, agreed. Okay, thank you very much, Steve. Now we have to get onto the sickening subject of the gun to the head trades.
I know. I feel it. I feel pained this morning. We were sort of chatting about it yesterday during the day, Joe, weren't we? We were looking at the account. It was looking really smart, and there was a few chickens that ran in front of the screen, and we started counting them. And you can't count your chickens.
No.
So yeah, and then it all went wrong. Someone let the fox in, and it gobbled the chickens up.
It did indeed. So just a quick recap, gun to the head trades. This is where Steve and I pick live ideas on the stream. As if we had a gun to our head, we pick them in the hope that they will make a return between now and 9 p.m. UK time when we close these ideas out. Of course, if they hit the stops or targets prior to that level, then they'll also be closed out. We are trading on a live account here, so we're risking 1% of trading capital per trade. It's only a small account. £2,000 is what we started with at the start of the year. And since we did that, we've just been on a bit of a run where things haven't worked out too well. But yesterday it was starting to look a bit rosier because we was actually well on side and actually taking the account back into profit following a period of drawdown. So as Steve mentioned, we were counting a few chickens, started 5:30 in virtually, of course, and yeah, it didn't work out too well. So this was Steve's trade euro yen. So he was looking for a flag or a pennant formation to take shape here. Started off really well. This is obviously prior to the ECB, and even after the ECB, we actually saw further volatility and progression towards our take profit levels, but then we saw this major reversal. So this was the trade set up yesterday. We can see got reasonably close to the target level at this point. We're very pleased. On the way to potentially a 4-hour winner, but then sadly, even before 9 o'clock, it was stopped out, which is pretty gutting. So we take a set and forget approach with these trade ideas. Is that right? Is that wrong? Well, in this instance, it was wrong. But throughout the course of how long we've been doing this for, we just left them. We haven't tampered with them. We haven't put any sort of risk management in place. I'm not saying that's the right thing to do, but this is the kind of rules of the game. We set and forget them. And get to review them on the next day. And in this instance,
the one thing from this trade idea that I sort of like thought about, Joe, that if I stuck to my plan, yeah, which is my plan, is like I looked back and I've looked at like thousands of trade ideas we've done on this show, and well, yeah, over the sort of like course of maybe the last 7 or 8 years, my average risk reward is 2.25 to 1.
Yeah,
and that results in a positive performance overall. Yesterday I went for a 4 to 1 winner. If I'd gone for a 2.25 to 1 winner, I would have been
taken out.
Happy days today. Yeah, it'd be a different story. You'd see a different Stevie O here. But yeah, maybe got a bit greedy with the risk, or got a bit excited, got a bit carried away, which happens. Funny enough, it's an emotional thing, this trading, Lark.
Yeah. This was the euro-US dollar trade that I did. So again, really good start, very close. Well, not very close. It got in the region
decent.
of moving towards the target. It's only looking for a 2.44 return on that. At 9 o'clock, I was actually still on side, so we actually managed to scrape a small profit on that of around 0.17R, I think, negligible, but not a loss. So wasn't a disaster, but yeah, could have done better there, Steve.
Yeah.
But it was a volatile session, and we knew that, and we were prepared for that. And we warned everybody about that. So if anybody did follow us in on these trade ideas, hopefully you did okay. I mean, Moch, by the looks of things, took 100 pips out of euro yen yesterday.
Nice
So
one.
she didn't wait around. She took out her profits when they were given to her. And yeah, congratulations to you. Glad we could help. Hopefully we can claim the assist on that.
Yeah, maybe. Yeah, anything. Claim anything.
Yeah.
Yeah.
Right,
So
we've got to go again, Steve. I mean,
I
I'm
don't know
looking
if
at
I've
this
got the
chart
energy
again,
now, Joe.
and I'm looking at this chart again and thinking I want to have a second go at euro US dollar.
Do you?
Just because if we look at the short-term move here, we can see it's stalling into a 61.8% fib level, and potentially reversing. So I'm just going to recycle this. I think
You just don't care, do you?
I do care.
No, but I'm just saying you got a bit of a cavalier attitude.
Yeah, I'm a bit of a maverick. So, I mean, one of the main reasons for this is that I'm still kind of eyeing up this potential pattern on the daily. And if this really starts to play out, then things could accelerate quite aggressively on the downside. Just thinking, maybe is this starting to weigh a little bit on the overall price? Is there, people now looking at this chart and thinking, do you know what? That may be shaping up for something I don't really want to be involved in, and might be tempted to take some sell trades as a result. It hasn't completed. It's not a head and shoulders top. Continue to reiterate that, but it potentially is. And if it starts to break down, it could be pretty nasty on the downside. So I'm going to go ahead with that. I'd like to sell euro US dollar at market, Steve, if possible.
Yeah.
With a stop loss at 106.90.
Yeah.
And I'm going for the humdinger of a target. It's Friday
Obviously.
after all. 105.16. That'll be a 4.5 hour return roughly.
Right. You're in, Joe. You're in. 106.90 stop. 105.16 target.
Okay, there's the order confirmation on Steve's screen. Let's see how that goes.
I like it, Joe. I like it. It's just like it looks like it's forming an evening doji star formation on the alley chart.
Love that.
Look
Still got
at
32
you.
minutes. 32 minutes to confirm that. But yeah, potentially looking low. It might. Over to you, Steve.
Well, I'll tell you what. I'm going to go with you. Someone asked for a sterling yen possible gun to head trade idea. So what am I looking at? Let's get an idea of where we are. Weekly chart, we've sort of like topped out, had a bit of a sell-off. We've had a bit of a recovery. Obviously, yesterday we had this rally higher. We're still under pressure. I think we're still sort of like bearish. Looking at maybe selling to rallies here. Short-term chart, we've formed a little bit of a bottom, but we've just stalled at this sort of like previous level. Which we were trading at towards the close yesterday, stalled again. Maybe we got a chance for a double top here, Joe. That's what I'm going for. I'm going to get in early and create new order, sell, market, take profit, stop loss, risking 1%. I'm going to have the stop quite tight. And looking to take profit at, well, that's 2.48 to 1. Let's go around about there. There we go. I'm going to look to take profit at 160.60. So just trying to keep my risk reward around about the 2, just above the 2 level. Looking for a double top formation, breaking down through the neckline and hopefully targeting that area of 160.60. I picked that level out just because it's sort of like married up to the risk reward that I have to take. Might look to, well, let's see if it marries up with any Fibonacci to make me feel a little bit better. Yeah, it's in front of the 50%.
Yeah,
that'll do. I'll be happy with that.
Okay.
Who wouldn't? All right, sterling yen, I've sold it. I've got a tight stop at it. That's it.
Cool. All right. Lovely. Good luck, Steve. Right, so day ahead. So we've got the US University of Michigan Consumer Confidence figure, which is due out at 2 o'clock UK time. That is it for today. Obviously, it's been a pretty busy week, and the fun doesn't stop. We've got more next week. We've got Federal Reserve policy decision on the 22nd. Then we've got the Swiss National Bank on the 23rd, as well as the Bank of England on the 23rd. Obviously, been a lot of changes in the forecast for what they're going to do as a result of the European bank situation, and obviously a couple of US banks now facing some issues too. So promises to be another volatile week. We'll do our best to cover that and get you set for it. I'm actually not around next week, Steve, am I? I'm in Spain.
All right, all week.
From Monday to Thursday. So at the very
Okay.
very least, I'll be back on Friday, but I may try and tune in on while I'm out there in the
Okay, mate.
mornings
All
to
right.
join you.
Yeah, you're welcome if you tune in. Great. If not, yeah, I'll do my best to sort of like not batter the account too hard.
Yeah, please do do your, I know you always do your best. I don't need to worry about that.
Okay.
Right, okay. Have a great day, everybody. Happy St. Patrick's Day again to those celebrating, and we will see you, or Steve will see you on Monday.
Cheers all.
Bye bye.